All right. Good morning, everyone. I'm gonna get going here. All right. U.S. stocks made another bullish run yesterday. Again, on light volume. We've really been seeing quite a push higher here on light volume and over the past couple sessions, but especially this one, I think just a bit of a drift higher. Finished the day really at the highs, and you can see there all sectors. For the most part, up across the board. We actually had tech that lagged a little bit, but it's really been pushing hard and leading this rally. So I think maybe just taking a bit of a breather. I'll show the charts in a little bit. We're also seeing all-time highs across the board in a lot of the European indexes. We had Germany that came out with much better than expected factory orders, really killed it actually on the news. We saw the euro pushing higher, and then we saw, but we did see commodities start to come off the boil yesterday, even with a lot of good news. So there's something interesting to watch. We'll talk about later. China exports and imports numbers came out with a huge beat in the prior month. Yeah, I don't really know that you can take that much out of it. I know it gave Asia a bit of a boost, obviously, but I don't think anyone believes those numbers, to be quite honest. And all the other Chinese data that's been coming out's been disappointing, literally. And people have any of the numbers that are fully monitored by the government, people just have a real hard time believing. So I think I think you've got to take those numbers with a bit of with a pinch of salt, and just realize that maybe that you can't make bets on the back of those numbers because they might not be very realistic. So basic material counters did trade pretty well, and resource shares traded well overnight. I think that's important to note, but really kind of comes in contradiction to how we closed here and how resources really started to come off the boil. Also note that Japan was up, I think, 2+%, and then they finished up the day about 0.5%. So we did have a pullback there at the end of the day, end of the session there. We had ING first quarter earnings that came out at 1.8 billion pounds. They're expected at 1.48, so a big beat there. We also had Sibanye that came out with its quarterly update just a little while ago, and to me, it seems like a spectacular beat. Really is confusing to me how the shares actually lagged so badly, because with some of the statements that they had put out previously, it kind of seemed as though they were really doing well when they had paid off that big chunk of debt earlier in the quarter. They announced that quite early, so you had an idea of what kind of pace they were on earnings-wise. Bottom line, really good news, really good earnings, I think. 98 cents on the earnings per share. That's a quarterly number, which puts them obviously on a P of almost exactly 2 at the closing price from yesterday. So, dividend-wise, you're probably looking at least 10% if they stay out on a 25% payout ratio. And possibly significantly higher if they up that. So what's also interesting to note, I think some good guidance in terms of production numbers. They're expecting them to increase to by 14% in the June quarter, which is fantastic considering how all of the other gold companies really kind of have shrinking production numbers and rising costs every month. They also had cash costs that decreased by 5% to 290,000 rand per kilo, and 360 when you throw in the capex number. So that's really, I think, a huge beat out of them. I really expect a big open out of Sibanye, and to be honest, I think after these numbers, you may be able you may start to see some guys starting to put some pairs on, buy these, and sell some of the other ones. And it could be a good play going forward, especially if they don't open up too much. All right, obviously we talked about the Chinese import-export numbers. I don't believe them. You guys might. There they are. We've got UK Halifax out later. We've got German industrial production numbers later. Let's watch that one closely. Big impact on the market. Germany obviously is going to be a bit of a leader for Europe, I think, and a good barometer for what's happening there. And then we've got mortgage apps and crude oil inventories out of the U.S. a little bit later. All right, let's jump into the maps real quick. All right, the first thing I want to show is the S&P. What happened to my charts here? Sorry, let me just fire up a new one here. I don't know what's happened. Okay, let's look at the S&P quickly. All right, you can see here. I mean, obviously we've broken out a few days ago from this trough here around. Call it 1545, probably 50 points of upside from the breakout level, so which means we probably have another 20 points to go in the S&P before we might start to see a bit of a pullback. The reason why I wanted to show this, and I'll show these others real quick, is just because they're all breaking the new all-time highs. Germany, that was the States. Now we've got the German market breaking all-time highs. You can see the FTSE, which we talked about yesterday before it broke, breaking to all-time highs. Pretty much global markets all moving to all-time highs or thereabouts, everywhere outside of kind of China and Japan. So, I think it's important to realize where we are. These are bullish markets. We are in a bull market. The S&P moved to 20% uptrend since November lows last year. It's an incredible move in such a short amount of time, and that's where this market is at the moment. What I think is interesting on that, and I'll show you these charts now, are resource counters. And yesterday, I know these traded pretty well in Asia overnight, so be a little bit careful. But yesterday, at the end of the day, we saw this hard turn down in the second half of the day in the resource counters. You've got Amplats breaking down out of a wedge formation there, and you can see it a little bit more clearly as well. Let's jump into 30-day. You can start to see here where we're getting ready to potentially test all-time lows here, or not all-time lows, but multi-year lows at 325. If we get below 325, you got to short this thing down to close to 300, or down to $300, I think. We can look at let's look at Anglos. Anglos also failed this level here at 232. We failed it really twice now. Once a few weeks ago, we pulled back hard, ripped up here again, failed it as well now. Big reversal bar out of Anglos yesterday, really underperforming the market, and you can see here same sort of thing. We actually in a little bit of a bit of a sideways range that we've put in here, but we are still in the downtrend in all these things. These things are pulling back as the markets worldwide are making all-time high. I think they're screaming at us that these things are not to be owned. I mean, obviously we've got gold fields, all the gold stocks as well, trading horrifically yesterday, and just have for a while now, breaking down out of this wedge pattern. Big red candle yesterday out of gold fields. Let's look at Impalas. I mean, all these resource counters breaking down from these wedge patterns and really just continuing these long downtrends. And it's really important that we realize that these stocks aren't getting up in a good market environment. In a bullish market environment, we're rallying every day almost, and on the S&Ps, in the European markets. And these stocks, not only do they not go up, but they're actually going down. These shares are not to be owned. You don't buy these things. You don't look for them on pullbacks. You look to short them on bounces. You look to short them when they put in these red bars below some of these wedge formations. All right. Moving away from that theme, I'll show you one more here locally. Discovery, big reversal yesterday. Big reversal bar. Could be there's support down here around $80. It's really where we broke out from. I should draw that line a little bit higher, somewhere between about $79.60 and $80. It's really where your support is. I think that's a big level, maybe worth buying off of. For you guys that are interested there. All the healthcare stocks actually got waxed a little bit yesterday. So interesting to note, see if it continues today. But around $80 might be worth a little bit of a nibble. If it gets below there, I think it's got more downside to it. All right, let's have a look at a couple of international counters. We'll show WPP out of London, kind of breaking out as of yesterday. Hasn't broken out from horizontal resistance to new highs yet, but looks very, very close on the cards. We closed kind of right at it. We closed at 1094, which is really right at the top end of the number. So look today. I think if this thing can get up and just an inch, I think it can take off. And then what's really interesting to note for me as well is that if you look here and you look at the XLE, which is a energy ETF in the States, we're talking about these commodity stocks that are trading horribly. But look at the XLE, which is an energy ETF, which is breaking out to the upside here. I think this is incredibly important to note that there's a big separation here and what's going on, and it's not necessarily the actual demand for energy and things like that are down. It's I think demand for raw materials, building materials, metals, those kind of things, which was 75% of the demand was coming out of China. That's no longer there, and you can see that coming in you can see the discrepancy here and the XLE versus the commodities baskets of different shares that I just showed you. Those aren't just South African specific charts. You can look at those charts across the board. They look that way anywhere in the world. So really important to note that the actual physical demand for a lot of the metals are just really down. Probably going to remain so until you really start to see some sort of life out of China. So that's going to be what we're going to want to watch going forward. If we do see it at some point, we will see a turning point, maybe only 6 months from now or maybe a year from now, on the mining stocks. But it's going to have to come from China, because that's where all the demands come from for the past 7-8 years. That's it for today, guys. Thanks a lot.